Hi, this is Mac with PriceActionTradingSystem.com. Today is Thursday, September the 13th, and this will serve as our chart lesson for today. Let me back out and show you the bigger picture. It was a great rally day. Today was FOMC announcement, and anytime you have that, this is typical of what you see right before the announcement. The market, you can see as we kind of get closer here to the announcement coming out, the market gets kind of nervous, and then all of a sudden you get the news, and boom, it's off to the races to the upside. Obviously, the market liked what the FOMC had to say, which is basically more easing and probably more stimulus money going to be thrown at it before it's over. So the markets like that news. But let's go back down here and start with the first couple of trades. And notice I didn't mark a trade until almost 10 o'clock. You could have went long here. If you went long here, you see what happens. It moved a couple of ticks in your favor, and then it came down and it dropped below the low, which below your signal bar. So you get burned there, and then the market goes higher. So it really wasn't a good setup. When it failed again and made the double bottom, that was a little better. But again, you got all those overlapping bars, and even though this would have worked for a scalp, you see it didn't go very far. And then it's pulling back again, but it made a higher low right here. And it had a first entry long and then a second entry long right there. It's kind of a failed second entry short that turns into a second entry long type. Well, it's actually really a trap, a short trap. And you notice how all the closes are now above the EMA, and it made yet another higher low right there, and you got plenty of room to scalp out up here to your highs. And so this was a nice little setup right here, and it moved pretty quickly. Most of your smart traders recognize that trap right there and took advantage of that. And then we made a little double top right there, and we ticked one tick higher and then turned and came down. So there's a nice short right there. And what this is overlap. You notice all the congestion. It's away from the EMA, and prices break higher and fail, and they come right back to the EMA. And we actually came down and tested this bottom again. But notice that we made another low. Actually, your low should move up there. There's your last closes, and we made one tick lower than those last closes and turned up and closed almost on its high. So you could have entered right there, or you could have, if you had time, you definitely should have entered here, because now you got another double bottom. We've really tested that low 1, 2, 3 times, and prices are heading right back. Now this all happened very, very fastly, or quickly, I guess you should say. I don't think there's such a word as fastly. So I'd say it happened very quickly. But you see, that bar closed at 11:31:14 my time, and we were already up at that high by 11:32:43. So a little over a minute we made all that when it took when it was taking forever to make that many bars. So that's how fast all that happened. All that movement right there happened in about 3 minutes, where all this movement happened in about 2 hours. So quite a bit of difference there. The market came alive, and you can see that. And the next entry, if you were able to catch that entry, it was a good one, but this one was right before the market. And it's really not always a good idea to be in the market when news like that's coming out. So I don't really recommend taking that trade right before the 11:30 news was coming out. So but if you took it, it was a good trade. You got to figure that prices, and you can look at this and see that the price action works even during the news. It just moves quicker. And you see we broke above this high, we pulled back real quick, tested the breakout area, and then went higher. That's perfect price action. And then we made a two-legged correction back down here, created our trend line, and then we moved higher again. Made just a slightly higher low, and then a few legs back to the EMA, and then we're off to the races again. And notice here's another two-legged correction. Off to the races, then another kind of 2 legs back to the EMA, and then off to the races again. And this time we overshot the trend channel line, so that's, and I'll talk about this trade when we get there. But notice where all your best moves came from, right off either the trend line or the EMA. Look at that, every single time. until you got up here. But this was obvious because we overshot the trend channel line. So you always want to copy or clone this line here, drag it to the top of the price action, and look for that to be a reversal type area. So but let's go back down here. Notice this move right here. There's your first leg, pull back, and then your second leg. A nice measured move, and then it was off to the races again. But let me show you this. When you get when you get that measured move, and this one breaks lower and turns up, a break above that is normally a good trade coming back to the EMA. But notice right here, we kind of had this first break, and then we came back down and tested it again. So that's like a double bottom. That's like a double test of that area right there. And then we went higher. So this was another great place to get long. And you got to be thinking that we're going to get a measured move similar to this leg right here. This leg right here. So you got to be thinking if we're going back up, we're going to make a similar type leg. And look where prices got to when we had a sell-off. We didn't quite get there this time, but we ended up going a little higher before we had another correction. So, and if you drop your line across there, you can see that's almost pretty close to a perfect measured move. We broke above it just a little bit. So that two-legged correction back to the test the breakout area again was a nice clue that we probably were going higher. And there was actually a second entry long right here, although I didn't like this one as much because there's several overlapping bars right here in a row, and it's just not really a great setup, even though it would have worked. And then we got one leg back, and then a little correction, and then a second leg. And you can see we missed one tick by that being a perfect. And there's actually two legs in the second leg, and that's not uncommon for there to be two legs in each leg, or one leg and then the next measured leg has two legs in it and so forth. So that's pretty common. And did the same thing kind of right here. We had one leg back, two-legged correction, and then another couple of legs back down. But this is almost a repeat pattern of this too, and you got to watch for those repeat patterns. But you kind of had a little low area right across there. That was the breakout, and you see we came back and tested that, and really the double bottom, I'd call that kind of a double bottom across there, and we broke lower and then turned higher. So going long above, you really could have gone long above that bearish bar right there, but it was better to wait. Let me get this. Should already have that there. It's better to wait on a more bullish bar, and you still got room to get out before the top. So either one right there, going long there or above this bar will work. This is really your signal bar here, but it's generally better to wait until you get a trend bar in your direction, which is right there. So even if you went long above that one, still a nice easy trade. Any runners were easily safe on any of these three trades. And notice where they all set up again, right at the EMA. And every time your runners were safe, so it was easy money on your runners. And these are the kind of days you want to get your runners going, and you want to hold on to them as long as you can. And then your next one didn't set up till right here. And again, you got all these matching lows across here, and we broke one tick lower, touched the EMA, turned up, closed on its high. There's your nice bullish bar. And again, you got that little inside bar there that we broke below and then closed above. But it was better to wait on this bar, so you go long above that, and it was off to the races again. And again, any runners were safe. Now this trade up here, I circled that in green, and the reason I did is because that's a huge counter trend trade. But look how long prices were away from that EMA, and look how we accelerated right here at the end, and then we had these two little matching highs. And we're away, you got these overlapping bars, we're way away from the EMA. That's a perfect setup. And the way I traded this was I dropped a limit order right above those two matching highs, and prices ticked up, executed my order, put me short into the trade, and it was an easy trade. It was an easy 4 ticks, and then plus some coming back. So, and that doesn't look like a very big move, but let's see what that is. I was short at 64, and this came all the way down to 59.50. So that's almost a 5-point move right there. And back to the EMA, and of course you either exit the EMA or you wait till either you could have exited above this bar or above the next bar. So there's different ways to manage that. But you probably want to get out of this. But the fact that we overshot this, that's your clue not to be trying to get long again until we get back to this trend line again. And by that time, it was too late in the day. So but even if you had taken that trade, your entry was right above this bar. So your entry was 59, and that went all the way to 60.75. So that's an easy scalp. So even if you still took that trade, there was no issues with it. And but really, once you see this overshoot on this trend channel line, that's your clue that, hey, I don't really want to be thinking about a long again until we come all the way back to this trend line and test it again. This was a pretty good setup because you had the 3 overlapping bars and you got that little trap where prices tick lower and then this thing closed on its high. So I did mark that one for that reason. And you do kind of have a measured 2 legs there at that point too. So, but that's probably leg 1, and then either there, probably more there, and you see that's pretty much what we did. It's really a 2-legged correction, and then we went a little bit lower and tested it again, and so you could have actually gone long again there, but by this time you're making lower highs and lower lows, so this one gets real risky, even though it worked. And I'll tell you what I did here. I actually got long. I did get long on this trade right here, and actually no, I take that back. I got long on this trade, and I rode this up, and this came back down, and I gave it an extra tick or two below the signal bar right here, and of course that worked out for me. And what I should have done was exited when we made this double top, and I didn't, and I let it come back down, and I gave about half of that back. I didn't want to make the same mistake I made yesterday, so I exited this one, and I gave most of that trade back. And really what I should have done was exited right here and re-entered here, but you don't always know what's going to happen, and you're kind of second guessing yourself. So that's 2 days in a row that I didn't take my profits when I should have, and I gave a bunch back, and that's just being greedy, because I was really looking for us to make a new high here, and I thought we were going to make a new high before we got to this, got back to the trend line. And again, I'm trying to second guess the market instead of following the price action, and that's what happens to you. So, but then by this time it's too late to enter anything else. You could have re-entered right here, but I was already long, so I did not want to re-enter again. And again, I had my stop 2 ticks below the signal bar, so I missed 1 tick from getting stopped out there, and it came back and it gave me my point again. Actually gave me a couple of points again, and when we made this doji, that should have been my signal to get out, and instead I let it come all the way back, I think, to the EMA before I exited. So gave back a point or two there, and I've done that a couple of times this week, and I'm just trying to second guess the market, and you just can't do that. Follow the price action. So that's a good learning lesson. Don't think you're smarter than the market, because you're not. Just follow the price action, and follow the rules and do what the rules tell you. And basically, another thing I should have looked at was this was 2 legs up right here. Show you this. There's leg 1. And then there's leg 2, and when we missed that by a tick, that's not a good sign, especially when we made that little double top. Actually, that would have been a great place to put a limit order, because if we ticked above that, it probably would have turned down anyway. And what we were trying to do in a strong market, we were trying to work back to the trend line. And you see, we got there and it bounced, and then we sold off again. But I think this was just all the people that were long exiting the market right in the last 10 or 15 minutes before the close. So my guess is we'll go retest this high. And again, this is a 5-year high we made here in the S&P, the mini S&P. So just shows you the market is just continues to go up. It's been slow and it's been choppy, but the long-term direction continues to be up. And you know, it's dangerous shorting this market unless you got a strong trend day, and a strong trend day to the downside, I guess you should say. And we haven't had many of those. We've had a few, but not many. And every time you think this market's about to roll over, it rallies to new highs again. So, but I'm going to wrap it up. This is about 15 minutes worth. I hope you recognize this was a strong trend. I hope you waited on the key entry points. And I'm just going to say it once again. The key entry points are, if the market is trending, if the market is ranging, where are the key entry points? They're across these highs. So you're looking for shorts across these highs, and you're looking for longs across these lows. That's what you do in a range. That's key entry points, are the lows and the highs of the range. If the market's trending, the key entry points are pullbacks to the EMA and the trend line, and are the trend line, because a lot of times it'll be the same place. But you see, obviously you probably would not have had this trend line in place, so this one's kind of a mute point, but it still was obvious this is a breakout pullback long. There's two legs back to the breakout area. We tested and then went higher. But here's your first pullback to the EMA, your next pullback to the EMA, your last pullback to the EMA. And the thing about this is, it wasn't just necessarily a pullback to the EMA. What happened was every time it made these a new low, and it trapped people, and then it went higher. And notice we had that little trap here, but notice that it was never triggered because prices never went higher, so you didn't get fooled there. Now if you got fooled on this one, that's your bad, because that's not a, you know, there's 4 overlapping bars, 5 overlapping bars, and it broke higher above a doji. That's a terrible trade. But when it broke lower here and you closed on your high, you had a chance to get long at the very low down here above a bullish reversal bar in your direction. And look at that move. And look, it did the same thing right here. It created this little low area across here, and it broke lower, and it trapped a bunch of shorts thinking that, hey, the move's over, and then it broke above that. It never looked back. And then once again, it does it again. You got all these lows across here. It breaks lower, touches the EMA, it turns up, and you go long right there. You actually could have gone long above that one right there, because it went below and then turned up and went above it, and then it's off to the races again. So and it's really the same thing right here. You look, you got those matching lows, you got your little break. Look, you had that here, but you never got a trigger until you had another little doji inside, and then it's not a good setup. On this one, you notice all the ones that worked, you got trapped and went up from there, and you got a break above the next bar. And you didn't get that on this setup right here. So, and this one you got it. This one you got it. Actually, we never broke lower, but that's coming off the trend line, so it's a little bit different. And you did get your bullish bar, and a break above it was good for a scalp. So, anyway, we're getting into 20 minutes. I'm going to wrap it up. Hopefully that all makes sense to you. Hope you made some money today. I hope you weren't trying to short this thing until we at least got this break up here. And even then, it was dangerous shorting any of this. Because you can see it really had to struggle to come down, but then when it goes up, it takes off pretty quick. That's because the overall trend is up today, and was for most of the day. So, but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.